All right, so let's take a deep dive into something that I think a lot of people are thinking about right now.
Okay.
And that is, the potential impact of a second Trump term on the S&P 500.
Yeah,
For investors, what does this mean for the market?
right.
We've got a great article here from MarketBeat. It's called What a Trump Win Looks Like for the Market Now and into 2025.
Okay.
Fresh off the presses, November 6th, 2024. It's got some pretty bold predictions in here, so
Yeah, it does.
I'm excited to dig into it with you.
Yeah, I think this will be a good one. What's interesting is we're not just, speculating, based on nothing. We
Right.
can actually look back at what happened during Trump's first term to get an idea
Exactly.
of what might be in store for us.
So let's start there.
Okay.
Remind us what happened to the stock market after Trump's first win.
So back in 2016,
Right.
the S&P 500 saw a 70% increase following that election.
Wow, 70%.
However, it's important to note that it wasn't just a steady climb.
Right.
There was quite a bit of volatility.
The infamous Trump roller coaster.
Exactly.
Yeah.
Um,
So what do you think were some of the factors that contributed to those market swings?
well, the article points to the trade war with China as a major source of that volatility.
Uh-huh.
All those tariffs and trade restrictions, really had a real impact.
Right.
And while some of those restrictions are gone, now new ones have taken their place.
Oh, interesting.
And the article suggests that, we might see even more trade-related actions in a second term.
So more potential shakeups in global trade.
Potentially, yeah.
Okay, but didn't the market also react positively to some of Trump's economic policies during his first term?
Oh, absolutely. Like
Right.
remember the Tax Cuts and Jobs Act of 2017?
Right.
Those business-friendly policies, particularly the tax cuts, were very well received by the market.
Yeah.
And it looks like we might see similar policies this time around.
So this is where I think things get really interesting.
Okay.
The article mentions plans to extend those tax cuts and even introduce new ones. Not just for businesses, but for
Yeah.
individuals as well.
Right.
So that would be pretty huge.
Yeah, it highlights, specific cuts to taxes on things like tips, Social Security, overtime pay,
Interesting.
all that kind of stuff. And the article argues that this would increase consumer spending power,
Right.
which could then boost the economy.
Yeah. I mean, that makes sense. If people have more money in their pockets, they're probably
More likely to spend.
going to spend more. Yeah, exactly.
Yeah.
Okay, let's talk about the labor market.
Okay.
How did that fare under Trump's first term, and what is the article predicting for his second?
So during Trump's first term, the labor market saw some really positive trends.
Okay.
Unemployment reached lows not seen since before the housing crisis.
Wow.
Job creation was strong.
Okay.
Job openings were up.
Uh-huh.
And this is an interesting one. The quit rate was high.
A high quit rate. What does that tell us?
So a high quit rate often means that people feel confident enough in the economy
Oh.
to leave their jobs and seek better opportunities.
Yeah.
And it can be a sign of a really healthy labor market
Okay.
and a strong economy overall.
So a robust labor market during his first term. That's great.
Right.
What about for a second term?
So the article does predict continued strength in the labor market, but it does acknowledge that the data has dipped slightly from its 2022-2023 highs.
Okay, so a slight dip?
Slight dip, yeah. It attributes this to a normalization after the post-COVID rebound and the impact of all that stimulus spending.
Oh, so things are just kind of
Right.
settling back down to pre-pandemic levels.
Exactly.
Okay.
Which, as we just discussed, were quite strong.
Right. Okay, so we've got a good labor market. We've got potential tax cuts.
Right.
But of course, we can't talk about the economy without talking about
Inflation.
inflation. What does the article say about that?
So it does acknowledge the risk of inflation,
Okay.
but it also highlights that the Federal Reserve is expected to lower interest rates in 2025,
Okay.
which could be good for Trump's economic agenda.
Yeah. I mean, lower interest rates, generally speaking, good for the economy.
Right.
Makes it cheaper for businesses to borrow money to invest.
Exactly.
Makes it easier for people to take out loans.
Uh-huh.
But is there a chance that inflation could stick around and force those interest rates to stay higher?
Yeah, that's a good question, and the article does address that possibility.
Okay.
It points out that even with the easing measures sustained, inflation could keep interest rates higher than what the Trump administration
Right.
and the market would prefer.
So there's a bit of a balancing act there.
There is, yeah.
Okay. But overall, it sounds like the article is pretty optimistic
It is.
about how the market might respond to a second Trump term.
Yeah, and a lot of that optimism stems from the S&P 500's projected earnings.
Okay.
The article highlights that the index saw strong earnings in Q3 of 2024 and projects an acceleration into low double-digit growth.
Wow.
for Q4 and into 2025.
So strong earnings and projected to get even stronger.
That's what they're saying, yeah.
Yeah. Wow. Okay, so what's driving that growth? Is it all Trump, or are there other factors?
It's likely a combination of factors.
Right.
But the article suggests that Trump's election could create a dual tailwind.
Dual tailwind.
Yeah, it's a really interesting concept.
Okay, I like the sound of that. Break that down for me.
So essentially, it means that Trump's policies could have a two-pronged effect, making it easier for businesses to operate and for consumers to spend.
Okay, so we're talking about the tax cuts again,
Yeah.
and the potential for increased spending.
Uh-huh.
Okay, and then there's the impact of capital returns, things like dividends.
Right.
Paid out to investors.
Exactly. And the article states that the S&P 500 is on track to distribute over $600 billion in dividends in the coming year.
Wow.
That's a 5% increase from 2024.
Okay.
And it suggests that we could see continued growth in these dividends under a second Trump administration.
So it sounds like we're looking at a potential trifecta of positive forces.
Yeah.
A business-friendly environment, a strong labor market, and a steady flow of capital back to investors.
I think that's a good summary.
But what about that bold prediction of the S&P 500 reaching 6,000 by the end of the year?
Right.
How do they get to that number?
So this is where the concept of that dual tailwind really comes into play.
Okay.
They're arguing that Trump's policies could boost both business operations and consumer spending,
Right.
creating a really powerful engine for economic growth.
Okay.
And this, combined with the market's current strong earnings growth and the potential for easing interest rate pressure, could create the conditions for a very significant market rally.
So the dual tailwinds is the driving force, but there are other supporting factors at play as well.
Yeah, exactly.
Okay. It's starting to paint a pretty compelling picture of why the article is so bullish on the market's potential
It is.
under a second Trump term. But I'm curious, did they offer any specific examples
They did.
of how this dual tailwind might play out
Yeah.
in different sectors of the economy?
Yeah, one of the most interesting examples involves the concept of reshoring, which Trump has really emphasized as a key policy goal. So, bringing manufacturing and other operations back to the U.S. It's
Right.
a big part of Trump's economic vision, right?
Right, reshoring.
Yeah.
Exactly. And the article suggests that this could have a really significant ripple effect across various industries, creating jobs, boosting the economy in a way that benefits both businesses and consumers.
So how does that tie into this whole dual tailwind idea?
Well, think about it this way. If companies bring their operations back to the U.S.,
Okay.
that creates a huge demand for workers here at home, right? And this increased demand can lead to higher wages,
Okay.
which in turn gives consumers more spending power.
Right.
And then that increased spending can further boost the economy. So it creates kind of this positive feedback loop.
So reshoring leads to jobs. Jobs lead to higher wages.
Yeah.
And those higher wages fuel consumer spending, which benefits businesses.
And drives market growth.
Okay.
It all comes back around.
It all connects. Did they give us any specific examples of how this might actually play out?
They did. And the semiconductor industry is a great example.
Okay.
Remember that whole global chip shortage
Yeah.
that disrupted pretty much every industry a couple years ago?
That was a big deal.
It was a huge deal, and the article highlights how the Trump administration is really pushing for increased domestic production of semiconductors.
Right.
The goal is to reduce our reliance on foreign suppliers.
Right.
And this push for domestic production could have a significant impact on the labor market
Okay.
and the economy as a whole.
So how does that translate into actual jobs and economic growth?
Well, the article names several major chip manufacturers like Intel and Micron Technology.
Okay, big names.
Big names that have announced plans to build new factories right here in the U.S.
Wow. So this isn't just talk. They're actually putting their money where their mouth is.
Exactly. These new facilities are expected to create thousands of well-paying jobs.
That's great.
Not just in manufacturing, but also in engineering, research and development, all the supporting roles.
So it's really a ripple effect.
It is, yeah.
Wow.
Okay.
That's huge. So it's not just limited to semiconductors, is it?
No, it's not. The article also mentions companies in fields like pharmaceuticals and renewable energy.
Oh, wow.
that are looking at bringing manufacturing back to the U.S.
So the potential for job creation and economic growth
Huge.
through reshoring is really there.
It's definitely there.
It's not just theoretical.
It's not.
This is really happening.
Yeah, and what I find really fascinating about all of this is how this deep dive has revealed the ripple effect of something like reshoring.
Okay.
You know, it can have an impact on everything from job creation to consumer spending to the performance of the S&P 500.
Right.
It's just a reminder of how interconnected our economic and political systems really are.
It really highlights how important it is to look at the big picture when we analyze market trends.
Yeah.
You know, we can't just focus on stock prices in isolation.
Yeah.
We need to understand all the political and economic forces that are shaping those trends.
Absolutely. It's all about connecting the dots and understanding how these seemingly unrelated events can create opportunities or challenges.
Okay.
But before we get too carried away with all the potential upsides, I think it's important to take a step back and consider some of the potential risks associated with the second Trump term.
Yeah.
After all, no investment comes without its downsides, right?
That's a great point.
Yeah.
As excited as we are about all this potential growth,
Right.
we need to be realistic about the challenges as well.
We do.
Did the article highlight any specific risks or areas of concern that investors should be thinking about?
It did. And one of the key risks it points to is the potential for increased trade tensions, particularly with China.
Right. We talked earlier about how the trade war was a major source of volatility
Exactly.
during Trump's first term.
Yeah.
How could this play out differently in a second term?
Yeah. Well, the article suggests that while some trade restrictions from Trump's first term have been lifted, new ones have been implemented.
Oh, interesting.
And with Trump's stated goal of further encouraging reshoring, we could see even more trade-related actions, which could lead to even more tensions and volatility.
Right. Any big shifts in global trade are going to have ripple effects throughout the market.
They are.
So that's definitely something to keep an eye on. Were there any other potential risks or concerns that they highlighted?
Yes, and this is a big one, inflation.
Okay.
We talked about how the Fed is expected to lower interest rates in 2025.
Right.
But the article cautions that if inflation stays high, the Fed might be forced to keep those rates higher than planned.
Oh, so it could negate some of that positive impact.
It could, yeah.
Yeah.
And that could put a damper on economic growth.
Inflation is the wild card that just won't go away.
It's a big one.
Been on everyone's minds for a while now.
Yeah.
What did they say about what might drive inflation higher during a second Trump term?
It actually goes back to that dual tailwind idea.
Okay.
You know, while tax cuts and increased government spending can stimulate the economy, they can also lead to an overheated economy.
Okay.
Which is a classic recipe for inflation.
It sounds like the Fed is really going to have to walk a tightrope here.
They are
trying to balance that need for economic growth.
Right.
With the need to keep inflation under control.
Yeah, it'll be interesting to see how they handle it.
So we've got trade tensions, we've got inflation is two key risks to watch out for. Any others?
They also briefly touched on the potential for increased political volatility and uncertainty.
Right.
Which was a hallmark of Trump's first term.
Yeah, the constant controversies, the polarized political climate. That's not something that investors can just ignore.
They can't. It can really create uncertainty and volatility in the market. Yeah. And while the article didn't go into great detail on this, it's definitely something to keep in mind.
It's a reminder that investing is about more than just numbers and economic indicators.
It's about understanding the political and social context as well.
Yeah, for sure. It's all connected.
It is. So while the article is generally optimistic about the market's potential under a second Trump term, it also encourages investors to be, cautious and aware of the potential risks.
It sounds like a second Trump term could be a little bit of a mixed bag for investors.
Yeah.
There's potential for growth in gains, but also those risks of trade tensions, inflation, and political volatility.
All those things could come into play.
Yeah, that could really disrupt the positive trends.
Absolutely.
Okay, well said. And as we always say on the deep dive, the key is to approach these complex issues with a critical eye. Consider multiple perspectives.
Yes.
And never lose sight of the bigger picture.
That's what it's all about.
That's what makes this whole process of exploration so interesting.
It is.
It's not just about finding the right answers.
Right.
It's about asking the right questions.
Exactly.
And constantly seeking a deeper understanding.
I completely agree. So as you continue to explore this topic and think about your own investment strategies,
Okay.
I'd like to leave you with a question to consider.
Okay, hit me.
How might a second Trump term, with all its potential upswings and economic implications, impact your own personal investment decisions
Okay.
and your overall financial planning?
That's a great question. It's a lot to think about for sure. There are those potential upsides, but like you said, no investment is risk-free.
Right. You got to understand the downsides, too.
Exactly. So let's dig into some of those potential risks.
Yeah.
What are the red flags that the article's raising for us?
Well, we talked about the possibility of increased trade tensions,
Uh-huh.
particularly with China as a result of Trump's focus on reshoring.
Right.
That's definitely something to think about.
Yeah.
While bringing manufacturing back to the U.S. can create jobs and stimulate the economy,
Right.
it can also lead to higher prices for consumers
Yeah.
if those goods become more expensive to produce domestically.
Right. It's that classic economic trade-off.
Exactly.
There are always costs and benefits.
Always.
It's not as simple as just bringing jobs back.
Right.
We have to think about the impact on prices, too.
Exactly.
What other potential risks did they highlight?
So another big one is inflation.
Right. Of course.
We've talked about how the Fed is expected to lower interest rates in 2025.
Right.
But the article cautions that if inflation stays high, the Fed might be forced to keep those rates higher
Higher than they want.
than anticipated, and that could really slow down economic growth.
So inflation is really the big unknown in all of this.
It is a big one.
It's been a concern for investors for a while now,
It has.
and it sounds like it's not going away anytime soon.
I don't think so.
What did the article say about what might drive inflation higher?
It's interesting. It actually ties back to that dual tailwind concept we were talking about.
Okay, how so?
Well, while that combination of tax cuts and increased government spending could boost the economy,
Right.
it could also lead to an overheated economy, which is, kind of a classic recipe for inflation.
So it's a really delicate balancing act
It is.
for policymakers.
Yeah,
Too much stimulus could lead to inflation, but too little could stifle growth.
right. It's a tough spot to be in.
Yeah. And that brings us to another risk. The Fed's ability to manage all of this.
Right, exactly.
It's going to be crucial in determining how the market performs
Absolutely.
under a second Trump term.
They're going to need to strike that right balance.
Yep.
Keep the economy growing without letting inflation run wild.
It's a tough job.
It is.
So we've got trade tensions, we've got inflation.
Mm-hmm.
Any other risks that we should be thinking about?
So their article also briefly touched on something that could add another layer of complexity
Okay.
and unpredictability to the situation.
Okay.
And that's the potential for increased political volatility and uncertainty.
Right, because Trump's first term was not exactly known for its stability.
It wasn't.
There were a lot of controversies,
Definitely.
a very polarized political climate.
Right. And that kind of instability can make investors nervous.
It can.
And it can create a lot of uncertainty in the market.
Yeah, for sure.
So while the article didn't go into a ton of detail on this specific risk,
All right.
it's definitely something to keep in the back of our minds.
It's a good reminder that investing is not just about, crunching numbers
It's not.
and looking at spreadsheets.
It's about understanding the bigger picture.
Right, the political landscape, the social context.
Yeah,
All of that stuff matters.
it does.
So it sounds like the article is encouraging investors to be cautiously optimistic
Yeah, I think that's fair.
about a second Trump term.
There's potential for growth, but there are also some real risks.
Right, you got to weigh the potential rewards against the potential risks.
Exactly.
Make decisions that make sense for you.
For your individual risk tolerance
Right.
and your investment goals.
Okay, well said. So to wrap it all up, it seems like a second Trump term could be a mixed bag for investors.
It could be.
There's a possibility of economic growth and market gains, but there are also those risks of trade tensions, inflation, political volatility.
All those things could come back to bite us.
Yeah, that could throw a wrench in the whole thing.
They could?
So, as we always say on the deep dive, the key is to approach these complex issues with a critical mindset. Consider a variety of perspectives and never lose sight of the bigger picture.
Couldn't have said it better myself.
That's what makes exploring these topics so interesting.
It is, yeah. It's about staying curious, asking the right questions, and always learning more.
Couldn't agree more. And as we wrap up today's deep dive, I'd like to leave you with one final thought.
Okay.
Given everything we've discussed today, how do you think a second Trump term, with all of its potential upswings and economic implications, might impact your own personal investment strategy and your overall financial planning?
It's a question worth pondering.
It is. It's a lot to think about.
It is.
And as always, we encourage you to continue exploring this topic on your own, to delve deeper into the sources that we've discussed, and to form your own informed opinions. Thanks for joining us on this deep dive, and until next time, we wish you all the best in your investing journey.